Hello everyone, here are the latest market news on April the 10th, 2020. EU finance ministers present virus combat measures. European Union finance ministers agreed on a €540 billion, $590 billion package of measures to combat the economic fallout of the global coronavirus pandemic. It's now up to EU leaders to approve the accord. The deal will lay to rest concerns that the EU was incapable of uniting behind a common strategy when it was most urgently needed. The common response includes a joint employment insurance fund worth €100 billion, a European Investment Bank instrument intended to supply €200 billion of liquidity to companies, as well as credit lines of as much as €240 billion from the European Stability Mechanism, the euro area's bailout fund, to backstop states as they go on a spending spree to help to rebound their economies. The ministers also agreed to work on a temporary fund that would help kickstart the recovery and support the hardest-hit countries while leaving how it would be financed. French Finance Minister Bruno Maire said the fund could be decided on in the next 6 months and may total €500 billion. Mexico puts the oil production deal at risk. A historic multilateral deal to lower global oil production and stabilize prices, led by record cuts from Saudi Arabia and Russia, is at risk as Mexico refuses to agree to the proposed curbs. The planned output curbs by OPEC Plus amount to 10 million barrels per day, or 10% of global supplies, with another 5 million barrels per day expected to come from other nations to help deal with the deepest oil crisis in decades. Overall, global fuel demand has plunged by around 30 million barrels per day, or 30% of global supplies, as steps to fight the virus have grounded planes, cut vehicle usage and slowed economic activity. But the group said that the final agreement was dependent on Mexico, which became the only participant not to agree to the proposal. OPEC Plus doesn't intend to meet again on Friday and will instead focus talks on a group of 20 gatherings scheduled that day. U.S. lenders plan to own oil and gas assets. Major U.S. lenders are preparing to become operators of oil and gas fields across the country for the first time in a generation to avoid losses on loans to energy companies that may go bankrupt. JP Morgan Chase & Co., Wells Fargo & Co., Bank of America Corp. And Citigroup Inc. are each in the process of setting up independent companies to own oil and gas assets. The banks are also looking to hire executives with relevant expertise to manage them. The industry is estimated to owe more than $200 billion to lenders through loans backed by oil and gas reserves. As revenue has plummeted and assets have declined in value, some companies are saying they may be unable to repay. If banks do not retain bankrupt assets, they might be forced to sell them at current prices. The companies they are setting up could manage oil and gas assets until conditions improve enough to sell at a meaningful value. Singapore suspends app Zoom due to security breach. Singapore has suspended the use of video conferencing tool Zoom by teachers, its education ministry said on Friday, after very serious incidents occurred in the first week of a coronavirus lockdown that prompted schools to move to home-based learning. One of the incidents involved obscene images appearing on screens and strange men make lewd comments during the streaming of a geography lesson, according to local media reports. Zoom Video Communications Inc. faced with safety and privacy concerns about its conferencing app, which has seen a surge in usage as offices and schools around the world were shut. Taiwan and Germany have already put restrictions on Zoom's use, while Alphabet Inc.'s Google banned the desktop version of Zoom from corporate laptops on Wednesday. The company also faces a class action lawsuit.